Hi, Larry Arth here with Equity Builders Group. Today I want to talk to you about the 5 wealth building principles. We believe only in real estate are you able to get all 5 wealth building principles. We do believe real estate is the ideal investment, and the acronym IDEAL spells out those 5 wealth building principles: income, deductions, equity, appreciation, and leverage. Let's use an example of a $100,000 property. Today's interest rate about 5.5% for investors, $1,000 monthly rent. In this example, we're going to incorporate all expenses. Side note, expenses should also include vacancy reserves and maintenance reserves. Most performers don't give you those numbers, but the reality in today's world, I mean, they do exist. So when evaluating income producing property, I always recommend that you do indeed calculate something for maintenance reserves and vacancy reserves. So let's take a look at our first wealth building principle, and that's income. When a property is rented out, it does produce income, which basically pays for itself. That's pretty cool. So when more income is generated each month than what the monthly expenses are, what you got left over is your positive cash flow. In the scenario of this $100,000 property rented at $1,000 a month, you're looking at roughly $3,350 a month in positive cash flow. Now that's pretty much what everybody looks at and bases their decision on. But that's just one wealth building principle, and there are basically 4 more. Your next one is deductions. D for deductions. All interest payments and expenses are considered a tax deduction. Over and above that deduction is something that's also a deduction, but it's called the depreciation schedule. In the early 80s, Reagan came out with basically a tax incentive to entice people like you and I to invest in real estate, and he basically said you can depreciate that value of the property over a course of time, and that is 27.5 years for residential or 30 years for commercial. This gets a little complicated, and it is a case-by-case situation based on your individual tax needs. So I always recommend you talk to your tax advisor on how that looks for you. But generally speaking, you get this $3,350 of annual income, and that's going to be taxed based on your current tax rate, whether it be 20, 30, 40%. That's going to cost you roughly $1,000 a month, or I'm sorry, $1,000 a year in taxes, depending on where your tax bracket is. Well, this tax deduction allows you to basically offset that $3,350 of income, and at the end of the year, you're actually getting a $100 tax break. So that tax break is a nice wealth building principle for you that most people overlook. And then your third one is equity, one that I'm very fond of. Basically, your mortgage payments are paid out of your rent. So when your tenants pay you rent, you pay the mortgage payment, and that mortgage payment in this scenario goes to pay off $1,077 a year towards the principal. So now you are $1,077 richer in the form of equity. Your fourth wealth building principle is appreciation. Now the 25-year average in America, 6% per year. So a $100,000 property appreciating at 6% a year is generating an extra $6,000 a year in hidden income. Now we know that the last few years have not been indicative of what the last 25 have been. So let's, for conversation's sake, just look at 3%, or basically a $3,000 benefit. How would you feel about an extra $3,000? That is your fourth wealth building principle. And then your fifth is leverage. When we borrow money from the bank to purchase real estate, usually 80%, the 20% out of pocket that we invest is leveraged to generate returns on the full amount of the purchased property. So in our example, we're using $20,000, that's our own out-of-pocket money, to purchase a $100,000 property. As this property appreciates at 6% a year, this is an increase of basically $6,000. That $6,000 growth was generated off of only your $20,000 out of pocket. So that equates to a 30% return on that initial $20,000 out of pocket investment. So that's a very powerful fifth wealth building principle. So there you have it. IDEAL spells your 5 wealth building principles. We do consider real estate to be an ideal investment.